Welcome back to Current Economy and Investment Insights. And of course, our follow-up show is going to be Your Money. Stay with us. Today is July 6, 2020, and we have Paul Munico co-hosting with me from Ameriprise Financial. Paul, I'm going to let you take it from there.
Thanks, Ron. Today, I'm going to give you a bit of a tactical update recommendation that Ameriprise just updated for the start of Q3. And again, just a reminder, these recommendations are certainly not specific to your portfolio at home. They're just general information to consider, things to bring up with your advisor and discuss. So we do have some modest tactical shifts to start Q3, like I mentioned. Last quarter at Ameriprise, our Global Asset Committee strategists guided that conservative investors should underweight equities given the high degree of uncertainty likely to prevail in the market over the intermediate term. And more aggressive investors should probably stick to their strategic long-term targets. But as we head into the third quarter this year, we continue to believe that remains the correct approach. One of the most critical supports for asset prices is the belief that the virus-related trends will improve. Over time, we soundly believe in this forecast. However, the sharp increases we've recently seen in COVID-19 cases in some areas of the country is a concern and bears close monitoring. The virus numbers, along with income economic data, still portend improvement trends, but we believe the quote-unquote V-shaped recovery narrative may be fading a bit. We remain underweighted in equities in more conservative models, but have taken steps to close some of the underweight positions in high-yield bonds. An argument could be made that markets have further upside in the second half. However, while the Fed has not been a big buyer of corporate bonds as of yet, the fact that they are willing may be enough to support both stocks and bonds over the intermediate term. Also, this rally has come despite market participants operating with very little clarity. Markets generally disfavor times when there is little known about economic or corporate financial prospects. And as the road becomes more evident, investors may be more willing participants. We recommend that more aggressive investors, particularly those that have a longer-term investment horizon and can look past the near-term challenges, they might want to maintain a generally neutral position relative to their strategic weights. So no major changes from Ameriprise. Again, general terminology, nothing specific that you should do without consulting your advisor first. If you're working by yourself, do more research. And if you're working or looking for an advisor, feel free to give me a call.
And Ameriprise Financial also shared this following information this morning. The U.S. equities are set to build on last week's gains with the S&P 500. Dow and NASDAQ each higher by more than 1% in early trading. Paul?
Looks like Monday is going to be another good day for the markets. Again, kind of like we're talking about here, there is a lot of uncertainty, which typically isn't good for the market, but we're riding this wave, and it looks like today, Monday, is going to be another positive day.
It appears that way. Stocks in Asia traded sharply higher to start the week in Shanghai Composite, gaining 5.7% to lead the advance.
That's good to hear, too, because, of course, this is a global problem with the COVID-19.
Right.
It's all over the world, so everyone's economies are affected. So if we can hear Asia is rallying, it's good news for market investors.
And WTI crude oil is holding near $40 per barrel, supported by tighter supplies and a string of data expected to show economic recovery across the globe. So I guess our gas prices are probably going to pretty much stay where they're at.
Gas is cheap. I just filled up my big SUV for $36 and I was on empty.
Yeah.
A year ago, that would have been $60.
Yeah.
You know?
Yeah. I remember one point, it was pretty close to $80 filling up my tank. It was unbelievable.
It was unbelievable.
Yeah. It was just, thank goodness.
But that helps the economy. That's a couple extra dollars in everyone's pockets. And
right.
who knows, you spied on going out, ordering food out or whatever, but that extra money in people's pockets does tend to help the economy.
Like the stimulus, that's what it was for, to do just that.
Yep.
And then the other thing that Uber announced, it will buy food delivery services. Interesting. Excuse me. Here's some year-to-date information. S&P 500 is a minus 2.13. Dow Jones is a minus 8.34. NASDAQ a plus 14.42. Those are all year-to-date.
All year to date, not really too bad of numbers. If we would have done this show back in March, they would have looked horrible. So the market has come back significantly from there. It's just, unfortunately, there's so much uncertainty still with the increases in COVID cases, the presidential election coming. So let's just take that for what it's worth now and be happy that the market has come back. But who knows what the future is going to hold.
You got it, Paul. You have it. And with that, we're going to say we're going to be going to our next show called Your Money. Stay with us. And we'll be talking about a topic Paul really has for you folks that are investors. Stay with us. We'll be right back. And thanks for staying with us. Here is the show that we've been talking about, Your Money, and an interesting topic that Paul has. Paul Munichel from Ameriprise, of course, is co-hosting with me. And he's going to talk about unexpected retirement. That could mean lots of things. It could mean the virus could be affecting it, cutbacks in your job, whatever. Paul, I'm going to let you take it from there. It's an interesting topic, and it's quite timely.
Yep, thanks, Ron. That was a perfect intro, because that's what we are talking about. The COVID virus, has you furloughed at home, or cutbacks, just like Ron mentioned, that may leave you retiring early. Here's some things to consider if you're in that situation. Early retirement is a concept that at one point in your working life may have seemed like a dream. Yet many Americans who have retired and have done so not by choice, but because of circumstances out of their control, this is who we're talking to today. For some people, it may be an injury or an accident that has short-circuited their ability to keep working. For others, perhaps the economic conditions have required their employer to reduce its workforce or close entirely. If any of these describe your situation, you may be confronted with the urgent need to get your retirement finances in order. And today we're going to go over 4 steps that you should consider as part of that retirement. So, number 1, assess all of your available assets. As a starting point, take inventory of everything you have. This will help you to determine whether you really have enough money on hand to meet your income needs. And we're not talking just for the immediate time, but for the long-term future. If you have accounts with different financial institutions or retirement plans with previous employers, you may want to consider consolidating them all in one place just for better management and to keep a better tab on everything you have. Point number 2, determine if you still need or you want to work. So as you review your assets, consider whether starting to tap into your retirement savings today will put an undue strain on your long-term financial security. If that's the case, you may need to continue to generate income through employment. That could come from full-time employment, part-time, or potentially by becoming a consultant. An added consideration is whether you really need to retire or you're ready to retire. If not, it's time to explore your options for ongoing work, perhaps with the help of a professional career consultant. Point number 3, check into your healthcare options. If you're age 65 or older, you may be able to enroll in Medicare, but if not, you'll need to consider other options. See your employer if they will consider extending healthcare coverage for a period of time, or if you have the option to maintain that coverage. Alternatively, if you are married You may be able to add your be added onto your spouse's coverage. If those choices are not available, you can look into an individual health care policy utilizing the Affordable Care Act marketplace. And last but not least, point number 4, position your investments properly. As you enter retirement, make sure your savings are appropriately invested. You may need to reduce your risk profile if you are invested too aggressively. A sudden downturn in the markets could result in a major setback for your nest egg that may be difficult to overcome. Stocks may continue to be part of your asset mix. Keep in mind that money needed as income for the next 2 to 3 years should be held in relatively safe investments like cash or short-term bonds. In conclusion, the transition to retirement is one of the most important financial periods of your life. Be sure to call on the help of a financial advisor to help you through this time. If you have one you're working with currently, great. If you're not, feel free to give me a call directly, and I'm at 708-226-3412.
Paul, I would just want to add to that, excuse me, what's really important is before you plan your retirement, you should really see a financial advisor.
Yes, if you've got the luxury, see one before you retire.
Right.
If you're forced into retirement through the examples we gave, you still have time to evaluate your options. The points I brought up too about talking to your employer about extending your health care. Health care is ridiculously expensive, it can be, and other options that still may be available to you.
And the other important thing is you should be evaluating and reviewing your portfolio annually with your financial advisor.
Exactly.
Yeah. All right. Well, thanks, Paul. Anything else you want to add?
Nope, that's it. We're hoping for another good week if we can get it in the market, and I'll be back next week with another update.
Very good. For Paul Munico from Ameriprise Financial, myself, Ron Jankowski with Channel 4 and Palos Heights, we wish you good investment day.